Effective communication is the backbone of financial reporting. Without clear messaging, even the most accurate financial data can be misunderstood or overlooked. In today's fast-paced business environment, stakeholders rely on timely and transparent information to make informed decisions. That's why mastering communication in financial reporting is essential. It ensures that everyone from executives to investors understands the story behind the numbers. As we begin this journey, let's explore why communication is more than just numbers. It's about building trust and clarity. Financial reporting is the process of presenting financial data to stakeholders. This includes balance sheets, income statements, and cash flow statements. But it's not just about the numbers. It's about telling a story that accurately reflects the company's financial health. Effective communication ensures that these reports are not only accurate but also easy to understand. By defining financial reporting clearly, we set the stage for meaningful conversations and informed decision-making. Financial reporting, communication isn't just for accountants. It's for a wide range of stakeholders, including management, investors, regulators, and employees. Each group has different needs and interests. For example, investors want to know about profitability and growth while regulators focus on compliance. Understanding your audience is the first step to effective communication. By tailoring your message, you ensure that everyone gets the information they need. Financial information can be complex, but your communication shouldn't be. The goal is to make reports as clear and straightforward as possible. Avoid jargon and technical terms that might confuse your audience. Use plain language and simple explanations to help everyone understand the key points. When in doubt, remember, clarity always wins over complexity. Consistency in financial reporting builds trust. When reports follow the same format and use the same terminology, stakeholders know what to expect. This makes it easier to compare data over time and spot trends. Consistency also helps prevent misunderstandings and errors. Make sure your reports are uniform in style, structure, and language. Timely communication is crucial in financial reporting. Stakeholders need up-to-date information to make decisions quickly. Delays can lead to missed opportunities or even mistrust. Set clear deadlines for preparing and sharing reports. Use reminders and efficient workflows to keep everyone on track. Timeliness shows respect for your audience and their needs. Visual aids like charts, graphs, and tables can make complex financial data easier to digest. They help highlight trends, comparisons, and key figures at a glance. When used effectively, visuals support your message and make reports more engaging. Remember to keep visuals simple and relevant, avoiding clutter or unnecessary details. Numbers alone can be dry and hard to interpret. Effective communicators use storytelling to bring financial data to life. By connecting figures to real-world events or business strategies, you help stakeholders see the bigger picture. Storytelling makes your reports memorable and meaningful, turning data into actionable insights. Communication is a two-way street. In financial reporting, it's important to listen to feedback from stakeholders, encourage questions, and be open to suggestions. Active listening helps you understand concerns and clarify misunderstandings. It also shows that you value your audience's input, building stronger relationships. Being open and honest in your financial reporting is essential. Transparency means sharing both good and bad news and explaining the reasons behind the numbers. When stakeholders feel they are getting the full picture, they are more likely to trust your reports and your organization. Make transparency a core value in your communication strategy. Different audiences require different approaches. For example, senior management may want a high-level overview while analysts need detailed breakdowns. Tailor your message to fit the needs and knowledge level of your audience. This ensures that everyone receives the information in the most useful way possible. Modern technology offers many tools to enhance communication in financial reporting. From cloud-based dashboards to automated alerts, these tools make sharing and analyzing data easier than ever. Embrace technology to streamline your reporting process and keep stakeholders informed in real time. Financial reporting must comply with legal and ethical standards. This includes following accounting rules and being honest in your disclosures. Effective communication means being clear about these standards and ensuring that all reports meet them. Upholding these principles protects your organization and its reputation. Communicating financial information isn't always easy. Challenges like data overload, technical jargon, or conflicting interests can get in the way. Recognize these obstacles and develop strategies to overcome them. This might mean simplifying reports, providing training, or holding Q&A sessions. Addressing challenges head-on leads to better understanding and stronger relationships. Establishing feedback loops is vital for continuous improvement. Encourage stakeholders to share their thoughts on your reports. Use surveys, meetings, or informal conversations to gather input. This feedback helps you refine your communication and make future reports even more effective. Investing in training for your team can greatly enhance communication skills. Offer workshops on financial literacy, presentation skills, and report writing. Well-trained staff are better equipped to create clear, accurate, and engaging reports. Continuous development ensures your team stays ahead in effective communication. In global organizations, cultural differences can impact communication. Be aware of language barriers, local customs, and varying expectations. Adapt your reports to respect these differences using clear visuals and avoiding idioms or slang. Cultural sensitivity helps ensure your message is understood by everyone. Some financial information is sensitive and must be handled with care. Communicate clearly about what can and cannot be shared, use secure channels, and limit access to confidential data. Protecting sensitive information is a key part of responsible financial reporting. Effective financial reporting often includes non-financial information, such as market trends, customer satisfaction, or environmental impact. Including these insights provides a fuller picture and helps stakeholders make better decisions. Communicate the relevance of non-financial data alongside traditional financial metrics. The best communicators are always looking for ways to improve. Review your financial reports regularly and seek out new methods for presenting information. Stay updated on best practices and emerging technologies. Continuous improvement keeps your communication effective and relevant. Let's look at a company that improved its financial reporting through better communication. By simplifying their reports and using more visuals, they increased stakeholder engagement and reduced misunderstandings. This case shows the real-world benefits of effective communication in financial reporting. Even experienced professionals can fall into common traps such as overloading reports with data, using unclear language, or ignoring feedback. Recognizing these pitfalls is the first step to avoiding them. Stay vigilant and always prioritize clarity and audience needs in your communication. Leaders set the tone for effective communication in financial reporting. When executives prioritize transparency and clarity, the entire organization follows. Leadership should model best practices and encourage open dialogue about financial results. This creates a culture of trust and accountability. Certain financial information must be disclosed by law. Make sure your reports include all required disclosures and explain them clearly. This protects your organization from legal risks and ensures compliance with regulations. Always stay informed about current reporting requirements. Digital tools are transforming financial reporting. Online dashboards, interactive reports, and real-time data sharing are becoming the norm. Embrace these trends to make your communication more dynamic and accessible. Digital reporting also allows for faster updates and broader reach. How do you know if your communication is working? Set clear goals and use metrics to measure success. Track engagement, understanding, and feedback from stakeholders. Regularly review these metrics to identify areas for improvement and celebrate your successes. During a crisis, clear and timely financial communication is more important than ever. Be proactive in sharing updates and explaining the impact on your organization. Address concerns honestly and provide guidance on next steps. Effective crisis communication helps maintain confidence and stability. The future of financial reporting is all about integration and innovation. Expect to see more automation, artificial intelligence, and real-time analytics. Staying ahead means being open to new tools and approaches. The goal remains the same: clear, effective communication that empowers stakeholders. Let's recap the essentials of effective communication in financial reporting. Focus on clarity, consistency, and transparency. Tailor your message, use visuals, and embrace technology. Listen to feedback and always look for ways to improve. By mastering these skills, you ensure your financial reports are not just informative but impactful. Now that you understand the importance of effective communication in financial reporting, it's time to put these principles into practice. Review your current reports, seek feedback, and make improvements where needed. Remember, great communication is an ongoing journey, one that leads to better decisions and stronger relationships.